Yeah, so look, just the context for this. We know Alibaba Group as this sprawling empire, Chinese tech company that touches everything from cloud computing. It is one of the biggest Chinese e-commerce players. But it started life back in 1999 as a business-to-business kind of platform that connected sellers over in China to buyers around the world. That business has continued to expand, and it's still a very relevant part of Alibaba's business. But you've got to imagine this global world of e-commerce. They're dealing with multiple currencies, multiple different buyers, multiple different sellers. And I had this interview with Kuo Zhang, who is the president of Alibaba.com. And there were two very key things he sort of announced that are not yet announced in this interview. One is that they're launching something called agentic pay, effectively using AI to amalgamate the conversations. If you were a seller, I was a buyer, to create a contract. So that's one thing, that is to create efficiencies, and the two parties have to agree on that contract. But the second thing was around payments. Now, as I said, it's a company that works globally. They're going to work in multiple different currencies across multiple different banking partners. But what they're saying now is they're going to use what's known and dubbed tokenized payments. Now, just to unpack that a bit, tokenized payments are effectively a digital representation of a payment in some form. They're often bank issued, backed by money on a bank's balance sheet as well, and they're issued on blockchain technology. This allows money to be transferred 24/7 at a lower cost, and importantly, skipping out a lot of intermediaries in the process, making it more efficient. This is something that Alibaba.com is planning to experiment with, and I spoke to Zhang Kuo, the president of Alibaba.com, to get a little bit more information about what they're planning. Let's listen in.
This December, we are going to launch two things in the payment part. The first one is agentic pay. The agentic pay is not relevant with the stablecoin. It's still based on AI. Just a B2B, when you start an order, it's not like I click a buy button and issue the order. It includes a kind of complex PI, the procurement instruct order, and including the payment terms, the Incoterms. Previously, it's all kind of maintained offline and uploaded to Alibaba.com. So, but now we see majority of the information is already in the conversation between the seller and the buyers. So we're going to use the tools to facilitate both sides to generate the order, the smart contract between buyer and sellers. Of course, each side need to finally confirm that contract is legit and can best protect their interest. But it's automatically kind of generates the order, can fulfill and automate and improve the efficiency of the total payment, and very easy for us to determine who violate actually the contract in the end, since we are using trade assurance to protect both sides, buyers and sellers. And second part is that we are leveraging the blockchain technology using tokenization to ensure that both buyers and sellers can enable the 24/7 and also can reduce their payment cycle, reduce their payment fees. It's not starting from the stablecoin, but it's leveraging the same technology of tokenization. So when the US buyers or Euro buyers pay a certain amount of euros, it don't need to go around different bankings around the world, but it actually is using tokenization and blockchain underneath. It can simultaneously kind of transfer this money to like Hong Kong or Singapore and back to China, and through our kind of payment network. I think that will greatly improve the efficiency of the payment. Stablecoin, we are going to evaluate after this.
Okay, and what exactly are you tokenizing in that scenario?
I think both euro and the US dollars, like when we work with JP Morgan, they have their own kind of tokenization system. We are leveraging them, working with them to make sure that the payment is in real time and also following all the regulations.
That was Kuo Zhang, their president of Alibaba.com. And Steve, you rightly said stablecoin-like product. And that's very important because there is a difference between tokenized payments and the stablecoins. When we think about stablecoins, we think about companies like Circle, USDC. These are private non-bank companies that are issuing these digital assets that are pegged to currencies backed by other assets such as fiat and bonds, etc. These tokenized deposits are on banks' balance sheets. They're part of the sort of banking infrastructure.
Very complicated algorithms which keep them underwritten by the right amount of assets.
Exactly. Yeah? And in that interview as well, Kuo Zhang was saying that they're going to be working with JP Morgan as one of the banking partners on this. JP Morgan this year launched the JPMD token, which is specifically designed for cross-border business-to-business payments. It'll be interesting to see how that pans out. But it's a big deal because for a long time, those in the digital assets industry have been saying this is one of the killer use cases for all of this underlying blockchain technology. And there was a lot of doubt about how this will come to fruition, how this is going to be used by global companies. And for a large tech company, a cross-border tech company like Alibaba to say they're going to be using this, relying on some of these new blockchain solutions from banks, is a really interesting development in my view.
It really is.